Hey traders, welcome back to Valareso Capital. On today's video, we're gonna go through the market update and we're gonna focus on the SPY, QQQ, and also the DIA. The purpose of this video is to create a high probability roadmap for next week. That way we can position ourselves in the path of least resistance and we can make profits. If you're interested in this information, make sure to stick all the way to the end of this video. Okay guys, so before we continue with the video, this video is for informational purposes only, is based just on my personal opinion and is not financial advice. So first of all guys, I have been traveling for the last couple of weeks. I didn't post any video last week, so we don't have any reference to start the video as we usually do. We usually take a look at the hypothesis that we created in the last video, and that way we can understand if we were correct on our assessment or if the market shows us different type of information. So right now, what is the market telling us? So let's start with the chart of the SPY right here. So the first thing that I want to cover is that it's pretty clear that the SPX, it is the chart of the SPX, is coming right into that 50 daily moving average. That 50 daily moving average is very close to this very important level of 5,100 on the SPX. Now the question that we have is, what should our expectation be going into next week, right? We want to position ourselves in the path of least resistance going into next week. So now the question is, what can we expect about the market? Now I do think that right now the market, there's a lot, we should expect more volatility, and we're going to cover the chart of the UVXY in just a second. But mostly given the geopolitical situation that right now is going between Iran and Israel, we should expect some volatility related to that. We have seen oil prices continue to rise, and I do think that we have to keep that in mind when trading this market. Now, of course, I do think that most of the information that we need is going to be found on the price action of the charts. So that is going to be our focus for this video. So let's start here with the SPX. So what actually happened last week? It's actually pretty interesting, right? We had this candle, this really gigantic candle to the downside. And I do think that a lot of people forgot the velocity and the size of this candle when we started seeing a bounce in the price action. And if we just take a look at the last time that we had a correction in the market, right? If we just go all the way to 2023 back on August, we can see right here that we had some similar price action in the market. You can see right here that we had a really big candle, right? And the velocity and the size of that candle was significant. And then of course we saw kind of the same price action, right? We had this bounce basically testing the upper side of that candle, and then of course we ended up having a correction to the downside in the SPX. Now I'm not saying that we're gonna see the exact same kind of price action, but usually what happens is that we tend to see clues in the market, right? So if you take a look at some of the last instances when we had a big candle pullback, right, like the one that we had right here, you can see that the market tends to bounce pretty instantly when there are a lot of buyers waiting for those moving averages. Usually what happens when we had this kind of candle and then we don't get that bounce instantly on the same week, we tend to see a little bit more chop, and usually we tend to see what is a change in the major trend of the market. And that's usually a very tricky spot, because that is usually, and it has happened to me a lot of times, that is usually a spot where a lot of traders start losing a lot of money, right? Because the market does not has a clear path, right? So the market went down, then the market started going up, then it's going down, and we're going to take a look at the chart of the Qs and we're going to see that information more clearly. But what is my expectation with the SPX? I don't think that is pretty wise to short the SPX on the first test of the 50 daily moving average. I do think that we have to be a little bit patient. Perhaps we're gonna see a little bit of a move, of a continuation to the downside starting next week, testing that 5,100 level, perhaps testing this gap that we have here. And also you can see right here, this black line is basically the Fibonacci extension, the 1618 extension measured from this low right here to this high right here, which is the most recent swing. So I do think that there's a lot of support right here. So I wouldn't be surprised if the market sells a little bit in the start of the week, and then perhaps we see a bounce all the way back to 5,150. So those are going to be the two levels that I'm going to be watching next week. 5,100 for support in the SPX, and I'm going to be watching 5,150 as resistance. So my scenario and the way that I would like to trade this is allowing the SPX to continue to correct all the way to 5,100, and if we happen to see a bounce all the way to 5,150, then perhaps that's going to be the opportunity to start some short exposure, and then perhaps waiting for a little bit of a continuation to the downside to test this gap that we have right here, somewhere around 5,025. This is going to be the gap that we had open after Nvidia earnings. So I do think that this gap is going to be pretty strong, and I wouldn't be surprised if the market happens to retest this gap right here. I think that is going to be a high probability a scenario that probably is going to happen in the next couple of weeks and not exactly on the first week. So that's going to be the expectation for the SPX. And now let's take a look at the Qs, right? And then we're going to take a look at the UVXY. In the Qs, this has been a way more choppy, right? You can see these candles, and these are not really easy candles to trade, right? One day the market is pretty down, the other day the market is pretty up. So we tend to see this is kind of a I think it was Brian Shannon who posted on Twitter that this looks like a barcode, right? Up, down, and this is actually pretty challenging to trade. But I do think that we can create a high probability roadmap for the Qs if we happen to drop below this 50 daily moving average. If the Qs happen to drop below that 50 daily moving average, I do think that there is a very high probability that we're gonna come and test this 430 level right down here, which also happens to be a Fibonacci extension. And if we turn on the market webs indicator, you can see that we have a Virgin POC, which is basically a point of control that we have not tested yet in the market. So I do think that there's a probability of a path for the QQQ going all the way down to 430, perhaps even closing that gap. This is also the gap from the Nvidia earnings, but you can see right here that the Qs did not have a significant advance like the SPX. This has basically traded sideways, so I wouldn't be surprised if we come all the way down and close that gap. Of course, the line in the sand for the Qs is going to be the 50 daily moving average, and also I do think that the resistance that we're going to be watching is going to be that gap of 441. So you can use those both levels to assess what the QQQs might do going into next week. So now let's take a look at the UVXY. I do tend to look at the UVXY a lot. I think that is much easier to make an assessment in the UVXY than the VIX, and I have mentioned it multiple times here in the channel that I like watching the UVXY because it tends to trade like a stock. You can see right here that this 50 daily moving average has been acting as resistance for a long time, and right now this is the first moment that the UVXY breaks above that 50 daily moving average, which in my opinion suggests that this is a flag in the UVXY, and then perhaps this is suggesting that we're going to see more volatility in the market. Unless the UVXY drops below this 50 daily moving average, then perhaps we're going to see a transition in the market. We have to be aware that that could be a scenario, but I think that the highest probability scenario is that the UVXY might continue its path to the upside, and then the SPX is going to continue to retrace all the way to that gap that we mentioned earlier. So that's basically going to be it for the video, guys. I don't want to make this a really long video, and I think that we have to keep things pretty simple. My main focus going into the next couple of weeks, perhaps into the next couple of months, or at least 1 month, we'll see, if we happen to start a correction, I'm just gonna focus on the indexes. It's much easier to focus on the indexes and not on the noise. At least that is my style, and not on the noise of what is happening with crude or GLD, or what is happening with some of the leading stocks. Some of them I'm holding, some of them I'm breaking down. I just want to focus on the indexes, and I want to keep things pretty simple, because I have found through experience that when we tend to see corrections on bull markets, it's very important to keep our mental capital and also our financial capital intact, so that when the next run starts, we are ready. So that's gonna be it for the video, guys. Thank you so much for your time. I hope that you have an amazing Sunday, and I will see you next week. Take care and bye bye.